This is Energy Frontiers for the week, proudly supported by the African Energy Chamber. I am Justina Okechukwu, and this is a warm welcome to everyone. As always, let's get started with some of the headline energy news in and around the continent. A new report by the International Energy Forum and S&P Global Commodities Insights shows that global spending on upstream oil and gas needs to rise by 22% to $738 billion annually by 2030 in order to ensure adequate supplies to meet growing demand and maintain energy market stability. In the meantime, the International Energy Agency, in its latest World Energy Investment Outlook for 2024, says global energy investment is set to exceed $3 trillion for the first time in 2024, with $2 trillion going to clean energy technologies and infrastructure, while upstream oil and gas investment is expected to rise by 7% in 2024 to reach $570 billion compared to the 9% increase in 2023. The African Export-Import Bank and the African Petroleum Producers Organization have signed the establishment agreement and the charter of the African Energy Bank. Following the signing of the documents, at least 2 member countries are expected to sign and ratify the establishment documents for the bank to take off. In other energy news, Geregu Power, a Nigerian-owned power generation company, have signed an agreement with Siemens Energy to develop solutions for capacity expansion at the Geregu 1 power plant. The deal is expected to triple Geregu's total capacity from 435 to 1,200 megawatts. Saudi-owned company APPO Power have signed a memorandum of understanding with Tunisian government for the development and production of up to 600,000 tons per year of green hydrogen in the North African country. The hydrogen will be transported to Europe via the South Suez Corridor pipeline. Eco Atlantic says the oil and gas exploration company have inked a farm-in to the 20,000 square kilometer Block 1 offshore the Orange Basin in the South Africa-Namibia border. Following completion of the farm-in, Eco is expected to have one of the largest blocks in the entire Orange Basin. And that's the summary of your energy news headlines. When we return, we get analyst outlook on the global oil markets. This is Energy Frontiers. Welcome back to the program. The Organization of the Petroleum Exporting Countries and its allies earlier this week announced an extension of production cuts, saying they will maintain a 1.65 million barrels per day cut until the end of 2025, while a separate cut of 2.2 million barrels per day will gradually be reduced over the next year and a half. Oil prices were seen bearish at the start of the week, but by Thursday, the market saw a rebound due to improved demand outlook for crude in the global commodities market. Paul Hickin, editor-in-chief at Petroleum Economist, tells me more in this interview chat.
Well, I think the market has actually been a bit in a bearish mood going into the decision, and it's in a bearish mood coming out of the decision. I think what we see is the agreement, while complicated and having many layers, it was pretty much in terms of what was expected. And was evidenced by the fact that the market didn't really react much after the news on the Sunday. And it then shifted downwards in a bit of a bearish trend afterwards, pretty much technical moves. And I don't think, while some people have been hanging their hat on certain bearish elements within the agreement, potentially the fact that the UAE have been given a greater capacity to increase their production further down the road, or the fact that some of these indications in the next quarter or so that there will be a slightly loosening of or relaxing of the quotas, if market conditions permit, which they said. So while people have been hanging, some commentators have been hanging their hat on a couple of potentially areas where you could see that they might be a little bit bearish for the oil market. At the same time, I think it's more a case of certain bearish trends around the macroeconomy, the global macroeconomy, being continued as the result of the agreement being as expected.
Right. We've seen that bearish trend all through the week as well. Now, give me your outlook on the oil supply as far as OPEC's plan to do a phased return to the markets of its 2.2 million barrels voluntary cuts is concerned.
Well, I think it's important to remember that there's no actual, while they've given forward guidance, and that's a real shift in the market to give that kind of forward guidance to the market that they may bring barrels back. I think it's been heavily caveated with the fact that it's depending on market conditions. Now, OPEC and OPEC Plus expect the market to tighten in the next few months. I think it has an upbeat version of oil demand. Maybe slightly out of sync with certain other organizations, but certainly there's a broad church in terms of where oil demand might be going, a broad array of views, I should say, about where oil demand is going. And it depends on where the oil demand pretty much is going to be going in the next few months. It's still unclear. We've had and this is what's been interesting in terms of the macro environment. We've had, if you look at two of the key elements from the macro side, which is US inflation, which is a big factor for the market, and that's been stubbornly high. Interest rates have been continuing at a high level. And back at the start of the year, you've got to remember that people expected interest rates to start coming down quite quickly in the US, and that inflation was beaten. And that hasn't happened. And that's what has perpetuated this sort of bearish mood in the market, plus the other factor being China. And there's still a lot of uncertainty about China's economic health. And that is, again, weighing on the market. You put that into the context of questions around, and that feeds into the uncertainty around whether the market is going to tighten. And even the Saudi prince mentioned that in his messaging, which he said that there's a range of forecasts around demand, that the economic uncertainty is still there as well, and they will have to wait and see. So I think that's still a key consideration. And when you look at the situation where OPEC is, they may well be in a situation where they're going to have to continue these cuts, and that will be a pain point for them, especially the voluntary cuts, because these are the extra cuts on top of the formalized agreement, which you talked about at the start of your show. And I think those are the ones which are the real pain points, and how long that will be able to stay in place, especially when you have the complicated factors like the UAE having an increase in their quotas, rightly so, because they have been picking up more slack. And also others may have discussions about baselines. It was back when some of the African producers were querying baselines and adjustments because of what they were producing, so much so that we saw Angola's departure at the start of the year. So these are complicated issues for OPEC Plus. They're sources of contention. We've seen Iraq and Kazakhstan being two key producers which have not met their quotas, and that is also a source of chagrin across the group. And for Iraq, it's been a constant source of issue for them meeting their quotas. So there are still complications, and while this does give guidance, I think we must remember that when OPEC meets again in December, they may again do a lot of readjustments depending on market conditions.
Thank you for staying with us on Energy Frontiers. Now, the 2024 African Economic Outlook report, which was released by the African Development Bank, shows that there is still a huge financing gap in the energy sector and highlights the importance of energy access for achieving structural transformation across Africa. So I caught up with AFDB's Chief Economist and Vice President, Kevin Chika Urama, during the just concluded 2024 annual meetings of the AFDB Group in Nairobi, Kenya.
This year's African Economic Outlook report on driving Africa's transformation and the reform of the global financial architecture finds out that huge investments are still required for the energy sector in Africa, because energy is like blood for the human life as for economic growth. Without access to energy, it is difficult to structurally transform any economy, because the manufacturing sector will be weak and epileptic and also very costly. And that is why at the African Development Bank Group, we are focusing a lot on what we call the New Deal on Energy for Africa, to accelerate universal access to electricity for all by 2025. A lot of work has been done in ramping up renewable energy access, in ramping up the discussion on just energy transition for Africa, to ensure that Africa has baseload energy that it requires in order to be able to industrialize. Because while renewable energy is very important, and we are investing heavily on renewable energy, we also do recognize that baseload energy is required for industrialization to happen.
Africa needs private capital to support developing and middle-income countries in their climate action efforts, and this can only be achieved through the de-risking of more private capital. That's according to Egypt's Minister of International Cooperation, Dr. Rania Al-Mashat. In this interview chat with Frontier Africa Reports, Dr. Al-Mashat tells me what Africa needs in order to bridge the financing gaps.
Climate action today has become a common denominator across all countries. If we're talking about national strategies, climate action is embedded in them. If we're talking about global issues, climate action comes in as one of the key priorities. But what is extremely needed is the financing. How can countries, particularly middle-income countries, developing countries, and those in Africa, we emit the least, but we have a very big bill when it comes to the financing gap related to climate action. And here comes the point of trying to bring in more private capital for climate projects. And this can only be possible if we have de-risking of private capital. And that happens through concessional finance from MDBs, including the African Development Bank. So I'm very happy as alternate governor at the African Development Bank to see the discussions of governors, the governing board of the bank, looking into these issues more, trying to increase the capital of the bank to be able to address some of these very urgent priority topics, and try to create more coordination between the MDB space or the global financial architecture, so that more resources are available, not just for the sovereigns, but also to crowd in private sector.
Now, there is a conversation about raising funds within Africa, but there's also the ones about saying that we can't do it all alone. So at what point do we meet in these conversations where it doesn't look like we're trying to take handouts, but at the same time trying to work on our own to get these things done?
I think that there's a supply side and a demand side. On the demand side, countries are continuously reforming the regulatory and also business environment to create a level playing field. So I think that is extremely important. But also on the supply of financing, that is very key. And what is needed is more concessional related to grants to de-risk private sector engagement. So it's really a multi-stakeholder engagement that is needed. And this is what all of us are trying to do in these conversations during annual meetings.
We are done dreaming of an industrialized Africa. No more enduring long journeys in darkness. No more imagining life without constant power. We are done. We are done. Done tolerating 24 hours without power, load shedding, blackouts, and power cuts. Enough. Imagine a life where our abundant natural resources can't power a generation. We can't cope with that reality. 600 million Africans still lack access to power? We have the solution. It's time to turn imagination into action. African Energy Week 2024 is the platform to implement change, sign deals, and take decisive action. And implement. Join us. Invest in African energies. Energy growth through an enabling environment, and be part of the movement that brings hope to millions across the continent. It's not just about power, it's about empowering lives and giving African hope. Be there to witness the transformation. African Energy Week 2024, where imagination becomes reality. Secure your seat now. Don't miss out on African Energy Week 2024. Visit our website and buy your tickets today. Let's light up Africa and create a brighter future together.
Project. At the time you need to build that project. Sign, baby, sign.
And finally, on Energy Frontiers, the African Energy Week has released its official program for the 2024 conference due from November 4 to 8 at the Cape Town International Convention Center. Visit www.aecweek.com to download the program and secure your participation slot to be a part of the dialogue on Africa's energy future, local content, sustainable development, including Africa's LNG, nuclear and oil industry potential. And that's the package of Energy Frontiers for you at this time. We appreciate you making the time to watch the show as always. Remember to follow the program on Frontier Africa Reports website, like all the video editions, send in your comments, and subscribe to our YouTube. Follow us across all our social media handles as indicated on the screen. I am Justina Okechukwu, and I'll see you again soon.